Welcome, friends, to Trading Justice, episode 201. This is Matt, your host, and I'm going to do my best Coach Tim impression here of the radio voice, bringing out the nice, smooth radio voice, welcoming all the friends to the Trading Justice podcast. Thanks for being the best part of the podcast and listening and downloading and sharing with your friends. In this week's episode of the Trading Justice podcast, we're going to get into what Dow 20,000 means, what it really means. Is it the start of a new bull run? Is it the top of the mountain, or is it something else? Is it something just for us pundits and people to talk about? We're also going to get into the strategy of the week, and with the Dow breaking 20,000, that is going to be what is called a bullish breakout. We're going to talk about that, why that technical pattern is so important, and then we're going to bring on Cam, and we're going to talk to Cam, producer Cam, about what it needs to learn how to be a trader as he starts his journey in learning how to trade the financial markets. And then as always, we're going to get into the clown of the week and we got some special ones out there, from Sean Spicer to Madonna to Russell Westbrook taking 6 different steps and not being called for a travel. It was insane. So sit back, enjoy this short episode of the Trading Justice podcast.
This is Trading Justice. Check out our sponsors, tackletrading.com, where you'll find comprehensive trade information, including the current state of stocks, commodities, forex, and economic reports, and much, much more. While you're there, you can download the 7 Steps to Trading Guide, Tackle Trading's proprietary and exclusive PDF guide on trading the markets, and start maximizing your trades.
Welcome back to the Trading Justice podcast. We're going to go through the market update, looking at kind of the different markets and what's going on with them. The S&P 500, along with the Dow Jones and every other major market index, broke out of resistance, with the S&P 500 breaking out with some authority of that 2280 mark, currently sitting at 2293. The importance of what a breakout, we're going to talk about that in the technical discussion on strategy of the week. But breakouts are momentum-based patterns. They have a tendency to continue through the breakout. This is something that we have been anticipating with the marketplace for quite some time, as the market was forming some degree of high base in the S&P 500, or if you wanted to look at the Dow Jones, a little bit of a retracement, but I would call that a high base as well. Both the S&P 500 and the Dow Jones broke out of those resistance areas. Once again, with the S&P 500 breaking out of resistance at 2280, as well as the Dow Jones breaking out at 20,000, the almighty whole number of 20,000. Look for those markets to continue in the short term, moving upward, with probability of it continuing based on the breakout of those major markets. We will have an entire podcast next week, coming out on Monday of next week, on what Dow 20,000 means and what it really means in terms of whether we're at the top of the market or if we're at the beginning of a new bull market, or if it just means something for all of us to talk about. Moving on to crude oil. Crude oil is in a neutral type pattern. I'm looking at a neutral trend with very important resistance right around $54 to $55 a barrel. Keep an eye on that as we get into inventories today and later on, as we see what happens in the oil market. Once again, I'm looking at support right around $50 with an overhead resistance at about 50. I do have a neutral to slightly bullish on crude oil coming into this week, leading into next week as well. Moving on to gold. Gold is in a bearish retracement. If you'll look at it on the weekly chart, it's a strong bearish retracement. Same thing on the daily chart. My expectation coming into the week that we were hitting overhead resistance right around 1225, leading into about 1250 being a major resistance area. It didn't get up to that level. We have a downward movement in price. I have a -1 bias on gold coming into this week. That would also lead to a very similar formation on silver. However, I do foresee some degree of reversal on silver and do not expect the bearish market to continue in the long term on gold as well. But for this week and coming into next week, both of those two commodities have a -1 bias associated to them. And the dollar has shown some tremendous weakness lately. In fact, closing underneath the dollar for the first, underneath 100 for the first time in over a month just yesterday. Strong upward movement in price. I do expect the dollar to go upward in price over the course of the next just few days into the next week, leading into resistance right around 102. That could form a head and shoulders pattern over the next couple weeks at around 102, with support at 100, with resistance at 102. Trade appropriately in those types of conditions. In terms of the breakout, and Cam, that kind of what brings me into the topic of the week. And the topic of the week, Cam, is bullish breakouts. As a young trader, Cam, I want you to come on in here. As a young trader, you are inundated with so much information from the podcast, from Tackle Trading. How's it going for you as you learn how to the process of a trader, or getting out there clicking buttons, or are you overwhelmed by all the information? Where emotionally speaking, where do you sit right now?
I think it's a lot going on right now, and it was a good time to jump in. There's a lot going on, like I said, and it is a lot of information. But like we were discussing at the gym the other day, the best way of learning is doing, and I feel like I've moved pretty quick with the terminology and all that stuff just by getting on Thinkorswim and listening to all the reports when they're put together every Saturday. Those reports are absolutely amazing. Become a really, really big fan of Keith King. He is thorough with his work. Forex report every Saturday. If you've missed it,
he's
check
good,
it out.
Isn't he?
Oh yeah.
He's,
oh yeah.
Yeah, Keith, no doubt. Keith is absolutely amazing, Cam. When I met you, about a year ago, a little bit less than a year ago, you'd never traded, you had never invested, you didn't have a brokerage account, but you were talking about economics, and you were talking about, the central bank, and you were talking about these things that had an interest to you. And it really piqued my interest because, Cam, not a lot of young men like yourself, the first conversation they have with somebody like myself is not about the central bank or the role of the central bank. What
True.
was it about? What in your past? I mean, why were you interested in economics or the central bank in the first place? Most people aren't.
What it was maybe I'm a justice bro deep down, and I just need to know why. I need to know why to everything. So I was never afraid to
Oh
ask
yeah.
questions. I always ask questions, and sometimes it gets me into a little trouble. But
Mm-hmm.
and I think that's why we hit it off, because I'm out here trying to figure out why. You actually gave me a book shortly thereafter called Start With Why. So maybe, yeah, it's all connecting. Cosmos are crazy. But
Yeah.
I was always really curious about how money works, and, how do they just pull it out of thin air, and what's going on with that? How do they control how much of it's in the system, and what happens when they take some of it out? And it was just great timing. I was really interested in all of the stuff. And actually, a little bit before I met you, I saw the movie The Big Short. And I'm like, that's a head scratcher to me. I was like, what the heck happened in
Yeah.
2008? So we had a great conversation on 4th of July about some of the things that happened. And
Yeah.
it's just been amazing ever since.
It's always refreshing, Cam. Obviously I'm a little older than you, but it's always refreshing to meet somebody who comes from that millennial generation, who is really, who is seeking information, who is willing to put the work in, who wants something better, but doesn't necessarily know how to achieve that. It's not exactly like, we teach investing 101 in schools, or trading 101 in schools. We teach people how to be employees. But there you are, this young man sitting on my porch drinking a beer with me and talking to the central bank and talking about, how money is created and how it impacts the marketplace. And, you're just asking these questions and you don't know. And I'm just sitting there looking back, I understand how it works. And let's talk about this. Let's have a conversation. It was an awesome conversation, but, you were green, you were new, you didn't have an understanding. But over the last few months, you've really dove into it. You've dove into trading. You dove into, watching the scouting reports. You dove into, everything we do at Tackle. You've listened to us on the podcast for months and months now. What would you say, as you are still very new, still approaching making your first transaction? what would you say is the most difficult thing in the learning process, going from somebody who knows nothing but has an interest in it to somebody who is getting ready to make their first trade?
I think overcoming the fear of failure. I mean, because and it took me to hear you say, why fear something you know that's gonna happen? What's the point of that? That sounds stupid. Like, you're gonna fail in life. That's part of the game.
Over the last 100 episodes, we just got done with our 200th episode just recently, and over the last 100 episodes, we've had some awesome young individuals like Sean Gray, who's part of the Rich Dad Empire and travels with, teaching people real estate, and he's just a young kid who's going out there and been doing this since he was 18 years old, and he has a tremendous amount of experience. You'll be listening here shortly to one of his interviews that we had with Sean Gray as we replace some of those other interviews we had over the course of the last 100 episodes. We've listened to individuals like Jake Lamore. We had him on the podcast on episode number 200. We've had him on the podcast in the past. What an impressive young individual who, was 20, 21 years old when he first met us and said, you know what, I want to learn how to trade. That millennial generation is now the number one generation from a population perspective in American history. And that generation is a savers generation, Cam. Because they watched their parents get it handed to them in either 2008 during the subprime market crash or in 2000. I think it's very important that we get that generation investing, that your generation learns how to invest and learns how to build businesses instead of just work for other people. And sometimes, it starts with just that first desire like you had, asking the questions, showing some curiosity, willing to step up and ask a question about, hey, listen, I know I can Google this, but or go to YouTube, but here I got somebody who has the experience right in front of me. So why don't I just start asking questions? And that's a beautiful, beautiful thing, because a lot of people don't even dare ask those questions any longer. Cam, you've learned, covered calls and naked puts. You heard us talk about credit spreads and directional trading. Coming into the strategy of the week, this is kind of where I think it's a very important place for a young trader to go out there and make that first transaction. And the strategy of the week here, Cam, is what is called a bullish breakout. Now, Cam, from a technical perspective, how well do you think you are reading a chart? Like trends, patterns, support, resistance. You're still obviously really, really new, but where do you feel you are on that?
I'm at the beginning phases of really understanding what the graphs mean. As far as trends go, no, I don't catch the trends yet. I know you have the head and shoulders, the kiss of death. There's a lot of different ones that y'all have. I'm not very, very good at seeing the trends, but I'm starting to understand the time segments and the candlesticks of the graphs. So that's where I'm at right now. Still actively seeking information about graphs and trends. So hopefully going in the right direction.
It is. There's, the number one rule of trading, Cam, is don't lose money. The number two rule is remember rule number one, according to Warren Buffett. And the number three, according to us, is trade with the trend. The trend is where you make your money. Bullish uptrends, bearish downtrends, sideways neutral trends. Some of that, learning how to read a chart is so vital to the success of a trader, especially when you're talking about delta traders who are directional traders, buying stocks, shorting stock, buying calls, buying puts, vertical debit trades. I mean, you name it. I mean, how you go about making that money depends on your knowledge level, your skill set, your trade management, your reward versus risk, probability analysis. There's a lot of ways to go about it. But the strategy of the week here is what we call a bullish breakout, and it is within a bullish trend. When we're looking at trend analysis, you're looking at a couple different things. You're looking at the direction of the trend. You're looking at the pattern. What is the pattern? Are we talking retracements, breakouts, continuation patterns, reversal patterns? And you're looking at the identification of support or resistance. Well, the strategy of the week is that of a bullish breakout, which is when you have a previous resistance area broken by the candlestick like we had yesterday. See, Cam, it wasn't necessarily just the fact that the Dow broke 20,000 yesterday. That's not what was just important, although that was historic in nature. It was that the Dow broke 20,000 and then stayed above 20,000. See, that's what a breakout is. It's not when it tests the water above that specific technical level. It's when it closes above that level. And when we see the market breaking out, Cam, there's a lot of ways you can go about making money. You can buy stock, you can buy calls, you can do what's called a bull call spread. There's a lot of different ways you can go about making money, but it's all on the buy side of the equation. And the simple thing that you can do is you can just trade the Dow Jones, or you can trade the S&P 500. You can trade that in the futures market. You can buy calls on the market ETFs. There's different ways you can do about it there. But if the market is breaking out, typically that means that there are many stocks that are also in specific bullish technical situations, whether those are retracements who are now confirming or breakouts that are now confirming as well. The question I have when it comes to making a trade on a breakout condition is, what type of strategy should we trade on that specific technical setup? Breakouts are aggressive. Breakouts have a tendency to continue moving in the direction of the breakout. They're clean in their technical setup. You have a clear area of now new support where you would want to place a stop loss under. So a lot of times when I see a breakout like this, I want to get aggressive with it, and I don't want to limit my potential gains, and that's where buying the stock, buying call options, or lowering cost and risk in a bull call spread is preferable. Now, my favorite in that capacity, Cam, is that of doing what's called a bull call spread, where you're going to buy a call option near at the money and you're going to sell an out of the money call option to lower cost, lower risk, and that's what we do in a bull call spread. But for those of you who are very new to the market, simply going out there and buying a stock on a breakout, or buying a call option with 3, 4, 5 months of time and a 0.60 delta, that's probably where you want to start, Cam. You don't want to start by doing an intermediate spread. You would want to start by simply, let's go virtual trade the stock. Let's go buy 100 shares of XYZ company and just see how it goes. But a breakout is very important for so many purposes, to the market, to the momentum, to the trend continuing. When you're talking about trend analysis, the only way a bullish uptrend continues is if previous levels of resistance have been broken. And in the marketplace, that is clear as right now. We are seeing a breakout in the S&P 500. We are seeing a breakout in the Dow Jones. Next week, when we talk more about what that 20,000 number represents to the market, we'll get into some detail when Coach Tim comes back from his trip to Philadelphia. So we'll save that to the discussion for next week. We just wanted to come on here and do a quick intro on the marketplace, and we'll be right back with clown shoes and lay out the rest of the podcast.
Cam here with a quick message from Tackle Trading. Today, the 26th, we have the market recap coming out. Tomorrow, the market scoreboard. And Saturday, all 4 of your scouting reports. They'll all be live on tackletrading.com.
Welcome back to the Trading Justice podcast presented by Tackle Trading. Hope you enjoyed those nice words by old producer Cam. Cam, we have Clown of the Week coming up. We got 4 really deserving nominees, and we're going to go through this fairly quickly. I'm going to read the first one we'll talk about, then Cam will read the second one. First one, Oklahoma City Thunder star Russell Westbrook went for a walk on Wednesday at Oracle Arena. The only problem, the ball was in his hands. He probably should have dribbled it. Now, Cam, correct me if I'm wrong, but he took a good 6 steps.
Oh, yeah. If you would have saw it live, you would have lost your mind.
I mean, I get it that in the NBA that, it's normal to take 3 or 4 steps, right? I mean, LeBron starts, picking up his dribble about halfway through at center court. But 6 steps, I didn't see it. Did it get whistled?
He got a whistle, but it took 6 steps for them to blow the whistle. I kid you not. They were
6
trying to
steps.
let him get. Yeah, there's a link in that slide.
Yeah, I'm looking at it right now. That is. I mean, don't get me wrong. Russell Westbrook is off the hook insanely good. right? Just, I mean, talk about his year, Cam. You play a lot of basketball, grew up playing sports. How historic is Russell Westbrook's year in your opinion?
The storyline and the drama behind it is what's awesome. His buddy leaves town and goes and buys him a ring, and he's still in Oklahoma City, and he's like, I'm not going down without a fight. And this is what he does: night in, night out, 100 miles an hour. He still has a full tank in the fourth. We're seeing greatness right now. Someone said yesterday at the weight room, if he had LeBron's body, this is the best player of all time. Do you agree with that?
You know what? I mean, Michael Jordan. It's hard for me to come. I mean, watching Michael Jordan growing up in the '90s and '80s, and I can't say anybody would be better than Michael Jordan. I mean, he's the GOAT. But I will tell you, LeBron. I mean, yesterday when we were at the gym and we were having that conversation about Braun versus Westbrook versus, all-time greats, I get it. I get that it's easy to make fun of LeBron James when it comes to his physical gift versus sometimes he hides in the fourth quarter. But Russell Westbrook is like the Energizer Bunny. He doesn't stop. But I don't think LeBron stops either. I mean, LeBron's a freight train. If I would say if Russell Westbrook had LeBron James' awareness, distribution, you might have the greatest there too. It's hard for me to say that, if LeBron had his, everything Russell Westbrook has, that he'd be greater, because LeBron possesses a lot of what Russell Westbrook has, but he also has the vision and the distribution, and, but man, Westbrook is on fire. There is no doubt about that. Next one there, Cam, why don't you read the next one?
All right. Donald Trump's White House counselor, Kellyanne Conway, coined a new term on Sunday morning when she stated the White House press secretary, Sean Spicer, did not lie about the size of Trump's crowded inauguration. Instead, Conway claims Spicer simply told us alternative facts. So
alternative facts. That is absolutely amazing.
Yeah, isn't she
Cam,
good?
What do you think of alternative? Oh man, how she says the things that she says, and she actually gets away with it. I don't understand it. She has one of the best, stone cold, heartless poker faces I've ever seen in my life, right? Ever seen in my life.
She's worth every penny. I don't like the whole, I don't like everything going on, but she is someone that can spin like the globe. She is so good. She's so good.
When you say, okay, you have your facts, but we have alternative facts. I mean, what are you supposed to say to that? Yeah, there's a lot of alternative facts. The world is flat. Alternative facts, right? Russia didn't help during the election. Alternative facts. It was the greatest inaugural speech ever. Alternative facts. We're going to replace Obamacare with something that is better and cheaper and will reach more people. Alternative facts. It's just like at what point I don't even know what truth is anymore. It's just constant spin on both sides of the equation. One says they have facts, and one they says alternative facts. We've seen both facts that were supposed to be facts and alternative facts be baseless and worthless and, nothing but cold hard lies. It should say alternative reality is what it should say, because that's what we're kind of living in right now. But I definitely believe Conway deserves a clown of the week for the alternative facts. Although a tip of the hat for the creativity to Conway. I've long said that she deserves more credit for Trump winning the election than anybody has given her credit for. Next one. This thief is a real pizza work. A man in the South Wales was caught on camera stealing 2 pizzas while dressed as a beer bottle. The saucy surveillance pic was taken New Year's Day at a Papa John's Pizza in Barrie, Southwest. The unidentified pizza thief entered a staff-only area, grabbed 2 pies, and left without paying, according to Barrie and District. Cam, talk about being creative. I mean, what has to go on in your head to say, you know what, I'm going to dress as a beer bottle. I'm going to set silence, and everybody's just going to assume I'm a beer bottle, and I'm going to do all of this to steal 2 pizzas. It doesn't make sense. What way? Okay, better question, Cam. What is the furthest you would ever go to steal 2 pies?
Gosh. I might dress up, but probably not as a beer bottle. I'd probably dress up in camouflage and hopefully just slide in there incognito and take 2. But a beer bottle is a little much. And I think it was a Heineken bottle.
Do a little camo. Do a little camo.
Yeah.
It was a Heineken.
Yeah, Heineken bottle.
Well, that was a liberal-leaning beer bottle then. Love it. That definitely deserves some type of clown of the week. Next, Cam, an embarrassed CNN and MSNBC quickly, but not quickly enough, pulled away from live coverage of Madonna's F-bomb-fueled speech at the March on Washington. Both channels let 3 of the utterances slip through. First of all, Cam, March on Washington, you're still young enough not to really remember a lot of the protests that we've had in our lives. Occupy Wall Street was a very, very big protest in 2008, 2009. Americans have protested many things along the way, from anything from gun rights to freedom of speech issues to, racial injustices and equality amongst women and races of every kind. What is your thoughts of the Women's March on Washington?
First and foremost, I am so proud to be an American. I know a lot of people aren't saying that right now, but that is real America. When we all have something we don't agree with, look at how we can mobilize in just a couple weeks. And I don't know if it's an alternative fact, but I hear that there was more people at the Washington March than the inauguration. So it's like, I think that's the strength of America, is how we all can get on the same page when we really need to.
It was huge.
It was huge. They went so big.
It was absolutely huge. It was huge. It was big hands everywhere, just big hands. I support it 100%. I thought it was awesome to watch. I thought, it was just people coming together to embrace equality amongst everybody. And I don't know how anybody can say anything negative to that when people are simply fighting for equality. And I thought it was a beautiful, beautiful thing that not only the people that marched in Washington, which from what I understand is one of the biggest protests we've ever had in our nation's history, to people marching around the world, to people marching in Los Angeles and San Francisco and Salt Lake City and Chicago and Atlanta and and New York City. People coming together of all different walks of life, different backgrounds in every capacity, and coming together to march with one purpose. And I know there was a lot of anti-Trump stuff there and whatnot, but I don't think that's what the message was. It was one of, I thought, of coming together in solidarity and fighting for equality amongst the genders and races and whatnot. And I think if you look at wage gaps between men and women, we still live in some degree of inequality amongst the genders. And I thought it was an absolutely beautiful thing that we should all support. Madonna dropping F-bomb after F-bomb, and I don't know how that gets us there, but what do you expect Madonna to do? She's Madonna. She goes by one name. She can do whatever she wants. But I think, and I've said this about Trump, and I'll say it about the protest. When your speech is filled with hate, it doesn't get very far. When you start a discussion or a debate with "I'm right, you're wrong," you need to come to me, I don't think that gets anywhere. I think peaceful discourse, discussion, debate. I thought the march, and I thought the vast majority of people that were doing it were doing just that. But I thought this speech went a little too far. So to recap Clown of the Week here, we have Russell Westbrook. with the travel. We got alternative facts with Kellyanne Conway. We got the beer bottle thief of the two pies, and we have Madonna's F-bomb fueled speech. Cam, who are you going to vote for?
Oh, so many great choices right here, but I'm gonna probably have to go with. You saw the Russell Westbrook travel. Was that pretty bad? I've seen a lot of basketball, but I never saw someone think they'd get away with something like that.
Well, and then he complained about it. That was bad. That was bad. But was that as egregious to trump a historical alternative facts speech? In the NBA, they travel all the time. Maybe not like this. I mean, this was historical. That was great. But alternative facts was it represents so much that people are just so sick of with Washington. And it's not just from Kellyanne Conway. It's whether you want to say this degree of information is facts and this one's alternative facts or whatnot. It's like statistics. You can come up with a statistic to prove a statistic, or you can come up with a statistic to prove your statistic is wrong. It's just a matter of how you want to view that and how you see that overall. I see what Kellyanne Conway did is ingenious in her capacity, but I see that as a larger problem with Washington and politics in general. Nobody trusts anything anybody says anymore. It's like we're only willing to listen to whatever somebody says that fits what our personal agenda is, and that's a frustration. So I'm thinking from the Trading Justice podcast, Kellyanne Conway, alternative facts, you are the clown of the week. Welcome to history, Kellyanne Conway, being the clown of the week. Guys, we got a couple more interviews to come up with to end the podcast. Yeah, go ahead.
I was just gonna say, if we want to shake the fake news thing, CNN needs to report that water is wet, and anyone that's still saying, "Hey, that's fake news," see ya.
You're lying, CNN. You're lying. Water is not wet and the sky is not blue. What are you talking about, CNN? I wonder if Trump would tweet out, if CNN said the water is wet, if Trump would say, "You're wrong, lies," right? That would be interesting, no doubt about it. Sit back and enjoy these last couple interviews we had from last year, and we'll be back next week with an amazing podcast on what the Dow 20,000 represents for the future. Thanks for listening to the podcast. We'll be back next week.
Up first, we have from episode 172, Pete Thomas with Your Own Personal Gold Standard.
I do have a couple questions for you, Pete, in terms of precious metals. What, in your estimation, why is it important for new traders, old traders alike, to learn about the commodities market and precious metals in general?
Well, let's go back to what you opened with, Matt, and I think that this is very important. As an old school trader, I believe in patterns, trends, things that have worked and worked a long time. So I'll give you the longest trend that I know of, and that was when Tutankhamun was alive and they were building the pyramids. He paid in onions, garlic, and gold nuggets. Now, gold, since the time of Tutankhamun to today, has always had a value. Always. Yeah. Now, if you go back to fairly recent history, every paper currency that has been created and held on faith has gone to zero at every time in its life except for the American dollar. So, you overlay those across each other, and gold and silver are the winners, just hands down. So I think what you're saying is absolutely correct.
In terms of that, Pete, from a currency backed by faith, we like to call those fiat-backed currencies. They're backed by the faith and confidence of the consumer to use that currency. The dollar, since its initial creation in 1913, obviously has been the reserve currency of the world. Once was tied to the value of gold. No longer
Right.
is the case, obviously. But even before 1913, we didn't really have a U.S. dollar per se, but we did use paper currency in the 19th century. I mean, you can date back the U.S. currency all the way back to, say, and again, it's not the same thing. It's not the U.S. dollar. That's been alive since 1930.
Oh, no.
13,
I mean, you could look at each state had its own state reserve.
yeah,
That's right.
And as a matter of fact, Virginia had the strongest currency. It was the most sought after because they had their own fleet. They had their own. I mean, it was a powerhouse. And you're 100% right. At one given time, there really wasn't a central currency at all. And each state, depending on their strength, was denoted by the value of their currency.
Mm-hmm. So why is it in your estimation? Because this is something I struggle with as an educator, as a trader, as an investor. Why is it that in today's era, 2016, why is it that the consumers of America are so enamored with their paper? Why is it that they have moved away so much from the metals community? I mean, there's this. I don't know if you've seen it, but there's this YouTube video of there's a guy by the name of Mark Dice, and he lives in San Diego. He's a kind of a personality down there, and he did this YouTube video where he had 10 chocolate bars, and he had a 10-ounce silver bar, and he's standing in this strip mall, and he's going out to just people walking down the street. Right?
I remember that.
It's awesome.
Yeah.
It's awesome.
Yeah.
And he's basically offering, what would you like? Would you like candy? Would you like the 10-piece silver?
Yeah.
And literally the consumers are saying, well, I can't eat the silver. What am I going to do with the silver? It's been a cranky day. I could use a piece of candy. And even at one point, he points out a silver coin shop where they could literally take that 10-ounce silver bar, and I think it was like $15 an ounce at the time, and he could exchange it for $150.
Right.
Nobody would do it. Why is that? Why are we so enamored with the paper?
Well, I think it goes to education. If you're running a country, are you going to stress in your school that it's a good idea not to have faith in your government, not to have faith in your
Certainly not. Certainly not.
Yeah. So I think that's the particular case. But let's go a little bigger, and let's talk to your listeners about some of the things that I do and that are occurring on a global scale versus some guy with a chocolate bar in a mall somewhere.
Yeah.
Right now, I do something called cross-collateralization. And this is...
Say that again. Cross-collateral what?
Cross-collateralization.
Collateralization.
And as you hear what I'm saying, it'll make a lot of sense to you and your listeners. And it is, for example, let's talk about currency strength. Let's talk about goods and services. I'm in China right now, and I have the yuan. And the yuan is not pegged to a global currency, so what's it worth? It's worth what it is.
Mm-hmm.
I have someone contacted me from Brazil. He says, I got some reals. I said, great. If I want to play ping pong, that's what I use them for, because basically, ping pong is what the reals are used for, because one day it's worth a nickel and the next day it's worth 27 cents, and anything in between if you can catch it. I said, I have no use for reals. What do you want to do? And he said, well, I'm buying a multi-million-dollar contract of this type of anti-corrosive spray that they use in Brazil, because they're on the ocean, everything rots. And they're going to buy these shiploads of anti-corrosive. They lose it on park benches, street lights, everywhere.
Yeah.
And they spray their buses with this stuff. And he said, we have to pay for it, and they will not take the real either. And I said, well, we got a real problem. I go, what do you want to do? He says, help me. I said, okay. We'll buy 2 tons of gold. I'll put it in my vault in Manhattan. I will make you the director and in constructive receipt of the metal, which is earmarked to your Chinese manufacturer. We will then take that gold and hedge it on the futures market so it's beta neutral. If it goes down, who cares? If it goes up, doesn't matter. Price of gold will rally, future will lose money. Price of futures goes up, gold will lose money. So I said you'll be neutral to market when you take delivery of your anti-corrosives, you sign a directive, I release the gold to the Chinese agent, everybody's happy. We fixed the real at whatever, I think it was city we went to at the time. City's going to give us a price. I'll purchase the gold and we'll do it. We have a perfect cross-collateralization, modern, high-tech market, one country trading with another, worried about the security of the paper that they're producing, and it was literally the government was producing the real, and this Chinese merchant was hooked up with Chairman Ping at the central bank. So we had two nations in between, and I brokered it with gold. So is gold being used today for major deals? You betcha. Is it being used in a big way? That's a big way.
Ladies and gentlemen, give it up for Pete Thomas. What a guy, what an interview. That was episode 172, and if you missed that one, no fear, we got him on the schedule. He'll be here on the Trading Justice Podcast in the near future. Up next, Sean Gray from episode 157 in Investing 101. Sit back and enjoy.
Yeah, well, you know, in spite of growing up in an entrepreneurial home and kind of in that environment, I still went the traditional education route, and you've been talking about it, the importance of financial education. That's really what was missing throughout my upbringing. I didn't have any of that. And while my dad was kind of an entrepreneur, he wasn't my whole life. You know, obviously, you got your listeners are familiar with the book Rich Dad, Poor Dad. I like to say I had a poor dad and a rich dad in one. For the first half of my life, you know, he was in corporate America, and we lived a good lifestyle because of the way he set up his business. And then he went off to be an entrepreneur, got into real estate, got into investing. In 2008, as everybody knows, everything blew up too. So my financial upbringing as a kid was definitely up and down, and it was awesome to see, though, because I got to see both sides of it. I got to see, you know, the corporate America, what that lifestyle looked like, and I got to see the entrepreneur lifestyle. So it was really definitely a unique perspective growing up in that household.
You know, it's that dynamic is really interesting because you got to see from both sides of the rich dad poor dad, but within your own household. You know, like me and Tim, you know, we grew up in an environment where my father was a hardworking blue collar, you know, put 70, 80 hours a week into the job, and he didn't work for other people though. He built his own businesses. He had a construction business where he was a general contractor. He owned an insurance business. He had a tax business. So he would constantly create these businesses. But he would, and he's an amazingly successful man, but he would always kind of be in that self-employed mindset. So that's kind of the mindset we grew up in, is certainly an entrepreneurial environment, but more from the self-employment perspective, and do it your own, and work hard, and all those things are still in Tim and I today. But it was amazing to see the other side of the equation. We didn't know there was another side of the equation until we really started learning how to trade, learning how to invest. You know, read books like you know, Rich Dad Poor Dad, The Cash Flow Quadrant, Think and Grow Rich, you know, Rich Man Babylon, and then you really are opening your eyes to an amazing another path, right? You have this traditional path that we all kind of go down, right, today. I mean, like, literally, the millennial generation, like 50% of millennials have higher education degrees, right? We all go down that path today. But there is this other path. There is this another journey where you can go and you can start learning how to invest and build business and being an entrepreneur. Sean, from a traditional education standpoint, how would you describe the differences between traditional education and secondary education, like the classes and mentorings and things you've personally done?
Yeah, well, we definitely have that in common in terms of seeing the entrepreneur side in the self-employed quadrant. it wasn't until I got out of school and started following my mentors around in the real world and started getting that financial education that I saw that you could be, the difference between self-employed and business owner and how much of a difference in terms of entrepreneurship that really was. So, the traditional education is great for certain things, but like you said, it doesn't prepare us for the real world. And I went to a prestigious university. It's got all kinds of awards and accolades and things like that. But I learned more following my mentors around probably in the 6 months right out of college than I did in all 4 years at that university. And it wasn't that university was bad. Like I said, I got some good things, got some great relationships from it, got some time to grow up and kind of get the partying out of my system a little bit.
Yeah.
But, it's not the way the real world works. I mean, I was just talking about it with my brother earlier this morning. You learn something when you're a freshman, and by the time you're a senior, it's obsolete.
Things have evolved.
It's just, exactly, it's not real world stuff.
By the way, there's one class in my college career that I wish I would have taken more seriously, and it's simply how to use Microsoft Excel and PowerPoint.
That was not a great point. I agree, T. I agree, but when I went to school, I was in my undergrad. I was like late 90s, right? So I went to school from like 97 to 2000. Then I went to law school. And it's not exactly like you spend a lot of time using Excel and OneNote and all those things that didn't exist back then. It was a different world, right? It was a completely different world. And then you see these kids, and I know I'm making myself a little old here, but you see these kids come in and they're just mathematical algorithms all in your spreadsheets. You're like, oh man, I'm glad I know you. You can really help me out with a spreadsheet perspective. So I agree with that, especially from a technological perspective. But Sean, Tim and I went to school as well, traditional route, and you learn amazing things. There's no doubt about that. And I am certainly not anti-traditional education. I really enjoyed my education. I think you said something very, very wise there, Sean, when you said, when I got into college, I kind of learned how to be an adult. Kind of learned how to be a producer to a certain extent. I learned how to get out on my own, and these are things that happen when we leave the household and go to college these days. Tim, in terms of you guys, let's see, Tim, you got started at what age? About 25?
I was 25 years old when I started trading. I'll never forget the kind of story behind it. I tell it all the time. I think I've told it on this podcast before. But essentially, I got out of undergrad, and I was looking at my choices in life, and I didn't want to really travel around the country to go to law school and pay a bunch of money when you were just getting out of law school and tell me how much you hated it.
Yeah.
And, so I was looking at a lot of things. I got hired, and I was in training. I was in sales training to become a car salesman, actually, working on a car lot. And I was there for about 3 days, and I was complaining to a lifelong friend that I didn't want to do it. It wasn't who I was. I didn't really connect to it. He said, well, why don't you come and take some trading classes, and then, let's start you down that path. And that was Aaron Arrington, actually, who kind of started me down that thing. And Aaron is a lifelong friend, and I kind of trusted him, but I didn't know anything about trading, Matt, when I started. I had never traded a stock before. I remember how confused I was when I looked at my first stock charts and all that kind of stuff. But it represented a lifestyle that was very different than, anything else I was facing. And that's all I cared about at the time, is I just wanted the freedom and the time.
I remember that, T. I remember I was running the construction company down in Emory County. That's what I started doing after law school. And there you went and I remember you applied for this gig at some sales at the car dealership. Mm-hmm. And that led you to talk to Aaron, who led you to be introduced to a guy by the name of Fred Vanderwerf. And then once you were introduced to Fred, then I was introduced to Fred. And the rest is history. But the reality is, Sean, you really never know the people that you're going to meet in life that are going to have a fundamental impact on your future. Mm-hmm. In your life, Sean, obviously growing up in this kind of environment, seeing both sides of the equation, who were some of the people that you met along the way that were like, man,
this person just really gets it. I want to be around these types of people. Did you have a moment where you just had this moment of clarity where you said, I finally found something that is life altering. I finally found something that is going to not only change my life but change other people's lives.
Yeah, absolutely. And it was probably the same thing for a lot of your listeners and maybe you guys as well. But it was when I was 17, I read Rich Dad Poor Dad, and that was the paradigm shift for me. I knew right then there was no way in hell I was going to go sit in a cubicle from 9 to 5 and get a job. I knew, growing up in sports, I knew if you want to be the best, you got to surround yourself with the best and play with the best. And so when I read that book, I just said, okay, I need to be an entrepreneur. I need to be a business owner and investor. Who's the best at this, and how do I get around him? And
yeah.
I mean, obviously Robert Kiyosaki, #1 best-selling financial author of all time. I said, okay, how do I get around him? So, like you said, I'm a huge fan of environments. It's all about the relationships and the people that you meet along the way for the doors that get opened and everything.
So you read Rich Dad Poor Dad when you were, what were you, 17, 18? How old were you?
So when I read that book, I started attending what's that?
I said, what age were you when you read Rich Dad Poor Dad?
I read it for the first time when I was 17, when I first got into college, and then I read it again my senior year of college.
And how did you so you read Rich Dad Poor Dad, how did you become a part of the Rich Dad group?
Yeah, and so from attending those live events, I started getting out there and attending all these live events, and I was on an investor summit at sea, and I ended up having dinner with Andy Tanner, and I know you guys are friends with Andy.
Great guy.
And Andy and I just hit it. Yeah, great guy, absolutely great guy. His whole family's wonderful. We just hit it off, and we had dinner, I think, 2 or 3 nights together, and it just so happened that he was doing a Rich Dad event in my hometown when we were getting back from the summit, and he invited me to come sit in on the class and see him do his thing and see what I thought, and I thought it was absolutely amazing. And so how I kind of actually got into Rich Dad, I can share that story real quick, is through Andy, because when I was sitting in that class, we started playing the cash flow board game, and by that time I think I was 21 years old. I had been playing the cash flow board game ever since I read the book, and so I was really familiar with it, knew how to get out of the rat race, and we were in a room of maybe, back then the rooms were pretty big. There was probably about 170 people in the room, and I was the only person to get out of the rat race. So I started helping everybody else at my table get out of the rat race, and actually Kathy Jorgensen and Sandy Brown came up to me after and said, hey, you clearly look, you know what you're talking about. You enjoy this stuff. Have you thought about coming on board with us and being on the team? So that was kind of my first introduction to that world, and seeing what Andy did and Rich Dad Education and everything. Ended up going to dinner that night with him, and as they say, the rest is history.
That's awesome. I didn't know, because I've always seen you on the real estate side, the business side. I did not know that your first event you ever attended was a stock event. That well, from that perspective, I didn't know that. So in your estimation, and again, I know you're primarily on the real estate side, but in your estimation, what are some of the differences from your viewpoint from investing in real estate versus, say, investing in the financial markets?
Oh, should I talk about this on a stock show?
Oh yeah, absolutely. We love real estate. We have real estate gurus on here. No, we love real estate. We love all investing.
Yeah, well, just for me, I understood real estate better. To me, it was slower moving. It was more control, less volatile. I liked the idea of leverage. When I first understood the concept of good debt and bad debt, and just how much faster I could move in real estate, that was kind of the draw for me. I mean, the trading was exciting, but I wasn't. I'm not sure how much math you guys do, but I'm assuming it's a decent amount. I failed college algebra 3 times, so it wasn't necessarily my strong suit.
Sean, I took Math 105 after I'd already been accepted to law school. I was so, like literally, Sean, I did, I was almost graduated. I'd done internships in Congress, the state legislature. I'd already taken the LSAT. I'd already went through all of the applications, and I came back for my last semester just to take Math 105. That is how bad I am at math. But there's these amazing things these days called calculators that that we can use. So we do a little bit of math, but nothing that a calculator can't handle.
Yeah, and the great thing, actually, you mentioned it earlier, is just the people that you're able to have around you. I don't forget who said, that you were talking about Excel, right?
Yeah.
That's a great thing about being an entrepreneur. You employ the resources and efforts and energy and time of other people in areas that you're not great at.
Yep, I 100% agree with that. You know, Tim, I want to ask you the same question because obviously, you know, Tim and I, we travel around the United States teaching other people how to trade, how to invest, and we come across a tremendous amount of real estate investors and real estate investors who have found some success in real estate. Maybe they're looking at another market to diversify in, or whether they're just getting started with their investment career and they're trying to make a decision on, well, do I really want to focus on real estate or do I want to focus on the financial markets? Tim, what would you say are some key differences between an investor in real estate and an investor in the stock market, or some similarities for that matter?
Well, I think that let's talk about the similarities first, because I've been, you know, especially teaching the stock classes and whatnot, getting to know students. We get a lot of students from real estate who also want to cross over and do both. I think both actually marry each other really, really well because the mindset's definitely there. One similarity is successful people are successful people, and it's usually because they're organized. They either they were born disciplined or they developed it, right?
Yeah.
Which isn't, you know, always the case for everybody. So you have to kind of work on that. You have to, 21 days to create a new habit, get scheduled, get structured, get organized, that kind of thing. And I think good investors, when it's time to work, they know how to focus. They don't try to do 8 million things. They focus on a few strategies and become really, really good at that. Most real estate investors that I know, when you talk to them, they're specialists in like 1 or 2 or 3 areas.
The Trading Justice podcast is brought to you by Tackle Trading. If you're sick of the bench, get in the game. And get in the game with Tackle Trading.